All right, and we are on. We're live. Thank you so much for joining me. This is Mitch Goldberg. You're watching Be the Boss of Your Money, where we help you become the best possible version of your financial self. We teach you all about personal finance, and it doesn't matter if you think you're experienced in personal finance. Well, it does matter, but we all could use a little help, and there's a lot to talk about. We focus primarily on investing and taking control of your money. We talk about a lot of things from borrowing. We talk about interest rates, the economy, Fed policy, so many things to talk about, so many. And while I have you here, I want to just let you know in advance, we are going to be talking about Microsoft. We're going to be talking about Walmart. We're going to be talking about PACCAR. That's the company that makes Peterbilt and Kenworth trucks. And we're going to be talking about Digital World Acquisition Corp, which is the SPAC that was supposed to merge with Truth Social. That seems to not only not be happening, but word on the street is Trump may not even renew his contract with Truth Social because he'd rather be on Twitter. And you know what? Who could blame him except all those poor people that took a shot in Digital World Acquisition Corp, which we covered here over a year ago. And I have to say, I was out and out negative on it. I didn't think it was a good investment, and I don't ever think you should make an investment based on, one person, a celebrity. I've seen what happens before when people do that, and add that to the dustbin of internet stocks that have fallen apart. So let me roll the quick intro, put up the banner here, and I appreciate so much you joining me. And here we go. This is going to be good. It's going to be quick, and we're going to do like a fast pace. If you have any questions, hit me up in the comments. I love hearing from you. So if you hit me with a question, I'll give you the answer. And the better part is it helps everybody who watches this. And if you don't mind, give us a like, a heart, an applause, a wow, whatever reaction is available, depending on which social media platform you're watching on. I'm streaming right now to YouTube. I'm streaming to Facebook, Twitter, and LinkedIn. Most of my viewers by far come from Facebook and LinkedIn, but I would love for anyone out there to ask me a question in the comments, because answering your questions is really the best part. I love giving the specific help to you. If you want to reach out to me about something that, that's a little more personal, that you really don't want to put up in the public forum, and you want to really talk to me about your own situation, you're always welcome to reach out to me. You can send me a DM. You can email me at mgoldberg@clientfirststrategy, or just go to clientfirststrategy.com and you can email me through there as well. Or you can always give me a call, area code 631-920-6622. And now we're going to roll the intro. Here we go. Excuse me. That water just went down the wrong pipe. I just want you to know. Okay. So here we are. It's, the middle of the week, almost the middle of the week. It just, time is flying by. So much is going on. It's Tuesday. Hey, you know what was cool? Today is the second day ever of a live radio show. So I'm doing social media live, like, I'm doing that now. It's very comfortable. Gee whiz. It's very comfortable for me to do this. You can tell I'm tired today, right? I'm very comfortable on the social media because I'm talking to my friends. I know you guys, we're connected. There's some people out there on Facebook and LinkedIn who we don't really know each other, but we connected because friends are friends. LinkedIn is a professional networking site, so I'm more likely to connect with someone I don't know on LinkedIn because we have some professional things in common. We put out good content. I like your content. You like my content. We have mutual connections. So, but it's more homey. I'm definitely more relaxed on the live stream. When I do the live radio show, it's hard to get a gauge for what the audience wants. So I've made the decision that I'm just going to treat the radio show just like I treat my live stream. a little bit of me, a little bit of the market, stories, but I'm just going to be relaxed and be myself. If I slurp some water out of my water bottle and I choke on it or whatever, I'm just going to cough my brains out right in your face. Just like here, I'll do it on the on the radio, and that's about it. That's what I'm going to do. Now, I really don't go on the radio until 9:06 a.m. So I'm not going to hit the live button until 9:06. I thought it would be 9 to 9:30, but with the commercials, with the ABC News update, traffic and weather, by the time they get to me, it's 9:06. So I'm not going to hit the live button on social media until then. And while I'm doing the live stream, the live radio show and live streaming that, definitely hit me up with questions in the comments. Give me those thumbs up and all that helps spread the word, because it's all about financial education. Now, I love doing this live stream. It's like a part of me, I just love doing it. And the way it developed is that when the market closed, you would maybe call a couple of clients. You couldn't call everybody. You can't call every single client every single day when the market closes. And then I used to write market notes, and I would like fax them out to like 10 or 20 people, and then the fax list would grow. You're talking very early 90s. I mean, fax machines were getting popular. A lot of people didn't even have fax machines yet. Now everybody has it. Well, fax machines have become like a relic, but it did get to the point where everybody had a fax machine. There was still a lot of people had a home fax, but it was really, they had to like flick a button. So the fax would would not go to their phone, would go to their fax machine, which I couldn't stand when people would do that. Could you try it again? I forgot to push the button. I'm like, no, so glad nobody's faxing anymore. When people fax, I'm like, really? I have to say, I actually, if clients aren't comfortable today with DocuSign, email, and social media, and texting, this doesn't go for existing clients, but new clients, I can't take on clients who can't use technology. It's just I can't take not new ones. My existing clients, I get it. Some of them are never good with technology, but most, like 90% of my clients, are totally fine with the technology. Anyway, and then you start to email stuff out, a blast email, and that was very helpful. And I stopped doing the blast emails probably about a year and a half ago. Part of it was, getting through the pandemic. I wanted to start live streaming. So October of 2019, I got access to LinkedIn Live. And at the time, less than 1% of LinkedIn users had access to LinkedIn Live. And I always thought that would be really cool to broadcast. And everyone had Facebook Live, but I just didn't think it would work well. It was a little primitive. I'd been on other people's Facebook Live shows, and, you had to do it through a phone. It wasn't really something that piqued my interest. But when LinkedIn Live came around, you were able to like make a whole production studio, much like you see now, when you could use the camera switchers like this, and you could put up like all the social media icons right on the screen. And I'm using a special soundboard that I'm going through with an XLR Shure MV7 mic. And it's really just so cool if you knew all the technology going on in the cameras. And I enjoy the stuff. Okay, fast forward. I applied for LinkedIn Live. I got rejected like everybody else. I applied again, and I just explained in the paragraph, I do lots of YouTube videos. I'm always making videos. I'm going to post them on LinkedIn, thinking, I'll give it a shot. And sure enough, one day I'm on, like a week or two later, I got access to it. I found out by accident. They didn't tell me. I just saw a little red dot on my LinkedIn profile page that said, you have access to LinkedIn Live. If you don't use it over the next few weeks, we might take it away. We might stop it. So like, I didn't know if I had it for a week or 2 or 3 weeks. So I just decided, let me do a quick LinkedIn Live. Then I did another one and another one. And then I started to do them once a week. And then I started to do them whenever there was once a week. But if there was like a crazy market, I would jump on for a quick LinkedIn Live. I used StreamYard to broadcast. That's how I was able to get this whole screen looking like a production studio. And then, and you see the banner going across down at the bottom of the screen. So what happened is the market was starting to haywire at the end of 2019 and the beginning of 2020. Something called COVID, coronavirus, was starting to go around, and we started to have some more volatility. So it gave me another reason to do a live stream. And before you know it, every day I was doing a live stream. I'm like, I'm making this a daily show. And then when everybody went home in like, was it early March of 2020? I'm like, I'm doing this every day. So I set up the whole live stream studio for my home, thinking people are going to have nothing to do, but people are going to have nothing to do but watch a live stream. So that's what I did. And it worked. It was very effective. And it's become like it's become my best marketing for sure, but I love doing it. And I get so much value out of doing it, and people get value from it. People come up to me all the time. They watch the show. They love the show. People don't always make a comment or leave a like, but they watch it. They watch the repeat. They tell me, and like people say specific things that I talked about in my live stream. That's how I know they watch it. Like they say something about Disney and Bob, oh yeah, like something I specifically talked about. I'm like, wow, they really did watch it. So I've been doing the live stream for well over 3 years. I had an opportunity to do a live radio show. And the live radio show is more like market open or pre-open of the day and some personal finance. And this is more like a market close show and some personal finance. That's the best way I could describe it right now. And I kind of want to go back. I want to go back to my old live streams and recycle what I've talked about. But there's so many. It's like hard to pick and choose exactly what you want to talk about. So this is, these are the decisions. Like, what do you talk about in the radio? The radio, I'm only on for 20 minutes max. So, like, it goes by very, very quickly. But that's how this all develops. And now I'm doing radio. I'm doing the live stream. I don't want to abandon the live stream because I've gotten so much out of it. And I'm talking to my friends because, if you're on Facebook, we're friends. You're on LinkedIn, we know each other. I'm sticking with this. And of course, I'd love to grow my YouTube channel. So if you're not subscribed to my YouTube channel, please check it out, Client First Strategy, and subscribe. And, that always is a good thing. I really appreciate it. All right, so let's take a look at how things did because the major averages were today. Let's go to, wait a minute, it's supposed to go to screen 4. Why don't you go on to screen 4, computer? 2, 3, 4. It's not picking up screen 4, but it is getting me stuck. So I'll just talk you through it, okay? The Dow is up 100 points after being down over 100 earlier today. It was a decent rally in some of the cyclical stocks, and it was good. Flat day. But this is, the Dow went up Friday, pretty good day. Went up a little bit on, yesterday, like 250 points, which is not a big deal in a Dow Jones in the 30,000s. And went up another 100 today. The NASDAQ was off 30 points, so it's 0.27. It was up, okay, yesterday. Wait, by the way, let me just go back. It was off yesterday in the Dow, not up. The S&P was off 3 points. Very, very small moves. Okay, so it was a down day yesterday, so the Dow rebounded a little bit. But the moves, I guess, let me say it this way. The moves are very small the last couple of days, and it's kind of markets are stuck at a standstill, waiting for corporate earnings. Investors are waiting for corporate earnings to come out. They're waiting to hear what CEOs and CFOs think about Q1, which is still pretty new, all right, of 2023. And what do they see for the rest of the year? We're waiting to figure out what the Fed is going to do. The Fed's job right now is to tamp down inflation and sort of keep us off, keep us on our toes. Keep us off guard. Don't let us get too bulled up. If the market goes up a lot, it actually hurts the Fed's job of fighting inflation because when the market goes up, we have something called a wealth effect, and we are more comfortable spending our hard-earned cash. That's how it works. That same thing when people's house values go up. There's something called the wealth effect. If you feel wealthier, you're more apt to spend. So anyway, Dow's up a little bit. Major averages, S&P and NASDAQ off a bit. You can't invest directly into an index, but you could invest in a security that tracks your mixing index. All right, gold continuing its march higher. It's $1,938. Oil West Texas Intermediate is down $1.37 to 80. And just so you know, there's two oils. There's Brent. I think Brent is like $88 or $87 a barrel. And there's West Texas Intermediate. West Texas Intermediate is oil that is sourced basically in the United States and the Gulf of Mexico. It's closer to us, so it's cheaper for us. So it's cheaper than Brent C crude. And Brent is basically what we count as Russian oil, Middle Eastern oil, OPEC, and Norway and England and anywhere else they get oil. Just, foreign sourced oil. 10-year yield went down to 3.45. The VIX is down to 19.2. That's getting pretty low. Some people think when the VIX is down to like, all right, we're still not giving me screen 4. So some people think VIX under 20 is a mark of complacency. I don't really think it's a mark of complacency, as I just think that investors are positioned for a slowdown and then a recovery. They're positioned for the Fed to start going with quarter-point incremental rate hikes. February 1st is the next one, so it's like a week and a day. It's a week from tomorrow. It's expected that the Fed's going to raise rates a quarter point and maybe a quarter point after that, and then they just stand still. And that helps investors feel more comfortable about investing. Let's take a look at the big stocks of the day. You might think it would be Microsoft. Microsoft came out with numbers after the close, and Microsoft is up over 4%. In dollar terms, it's up over $10 in the aftermarket. This bodes very well for trading tomorrow because everyone's been worried about these large cap, mega cap tech stocks, especially about earnings. We're going through a very strange period. Microsoft is like the grandfather of tech stocks. But when you're looking at the heavyweights, Amazon's been around since the 90s, but Microsoft has been a heavyweight way longer than Amazon. But if you look at these stocks, and if you look at Alphabet, which came about went public in 2003, you look at Tesla, you look at Netflix, you look at when did Visa come public? I think Visa came public in the 2000s. Was it 2004 maybe? 2005? I forget exactly. Around then. Anyway, Microsoft is the granddaddy, but these large cap tech stocks have come in hard. And what we're seeing for the first time is layoffs. Like, Meta, Facebook, we call Facebook Meta now. They're having layoffs. Salesforce.com. This is the first time that we've ever seen, so I should say since the tech wreck of 2000, this is the first time in over 20 years that we've seen like mass layoffs in the tech sector. And these companies didn't have to worry about layoffs because they were growing at any price. Plow money back into the company, reinvest because we're growing, and the growth is so good they could never get enough employees. This is the first time where we see these companies bumping up against the highest potential level of growth that they could have, not able to get past it. So now they have to protect their margins and fire people. So the growth of these companies, it's no longer like a matter of will these companies grow again like they used to. It's more like a matter of could these companies ever grow enough to get back to their old all-time highs from a little bit over a year ago. That's really what it comes down to. Like Meta, which is Facebook now, I think that stock would have to more than double. Well more than double. Same with Amazon to get back to their old highs. Do they have enough growth to double? And how long does it take for a stock to double? If a stock can compound at 10% annually, it would take a little over 7 years to double. Can you wait 7 years for a stock to go back up that you're down in? Most people can't. Most people bail out of a stock eventually, finally turning the stock into a value play. And when a company finally does, if it could get back to growth, it's a really good time to own a value stock. But it's going to take a long time until Meta and Alphabet, which is Google, and Netflix and all the other these stocks and Tesla, it's going to be a long time, even Microsoft, until they are considered value stocks. Now, some people could come out and say, oh, yeah, these are good values. Doesn't mean they're value stocks. They're just growth stocks that got pummeled, and people expect their growth to go right back up. That's not value investing. The next one, Walmart. Walmart is raising their minimum wage to like 14 bucks an hour. All right. So, what do you think of this? I think it's still like kind of pathetic. In New York, the minimum wage is $15 an hour, but the average person at Walmart, store worker, is expected to earn 17.50 by early March average. All right. Well, they Walmart's. If you look at Target, Best Buy, their minimum is $15 an hour. So Walmart's been considered behind in that area. And a lot of Walmart customers also collect welfare. So a lot of people feel like Walmart is being subsidized by the US taxpayer or the US creditors, those who lend money to the United States when they buy treasuries. So what do you think? Still amazingly low, but that's what it is. Okay. So we spoke about Microsoft. Now let's take a look at PACCAR. PACCAR is up on the day 8.5%. Stock's up almost $9 a share. That's a big deal for any stock, up almost 9%. And PACCAR hit a new 52-week high today on strong earnings. Now, PACCAR makes trucks. Peterbilt and Kenworth are the noteworthy names. These are big, giant, heavy industrial machines that move stuff all over the country. So if their earnings are good and that stock is now accelerating and hit a new high, that kind of tells you something about the economy. Because listen to me, everything goes on a truck. There's nothing you have that has not been on a truck. Think about that. Everything has been on a truck. So if PACCAR is doing well and they're manufacturing trucks and getting orders, that could tell you that maybe the recession coming up really will be shallow or we'll have a soft landing. And the difference between what I'm saying to you now in my live radio show is I could talk to you about mild recession or a soft landing because you talk about this stuff so often that you know what I'm talking about. But the radio show, I don't know if people really know what I'm talking about. So I feel like I have to stop and explain every little thing. So the conversation's not flowing. That's the problem. The conversation's not flowing. Ain't nobody got time for that. Man. All right. So that is PACCAR. So that's really good news. Microsoft, Walmart. Let's talk about social media stocks, in particular, Meta, which is Facebook, Snap, which is still publicly traded, and Digital World Acquisition Corp. You're like, who the F is Digital World Acquisition Corp? That's a SPAC that merged with Truth Social. So Truth Social could go public through a SPAC offering with Digital World Acquisition Corp. And now, if you want to buy Truth Social, it's a stock. Truth Social is, it's Donald Trump's social media, all right, to compete with Facebook and Twitter because he was booted from those platforms. Twitter said he could come back. Digital World Acquisition Corp. Now, Truth Social, he said Trump might not re-up his agreement, his his contract with Truth Social. I have some, you know what? I wish I could show you the video. All right, let's see if I could do it. Now, let me pop myself up here. All right, and let me get rid of the social media icons. Let's see if I could get this to work, okay? Hopefully you could hear this. I think you. Yeah. All right. So that's the story. All right. People bought Digital World Acquisition because you're buying Truth Social stock. That's how it became a stock. And people bought it up to the price of $100 a share, 14. So, you know, over an 85% drop in value. Now Snap has gone from 42 to 10. So that's not far from an 80% drop in value. Okay. And Meta 328 to 143. So that's down by more than half. And it was a good deal down more than that recently. So any social media stock would be down. The only reason Twitter stock didn't go down to like way, way lower, I have to say, in my opinion, is because Elon Musk took Twitter private. He bought the company and he tried to wrestle out of that deal. He didn't want to buy it. He tried to get out of it because he knew he was buying something that was worth a crap ton less than what he was paying. So it's no surprise to see these stocks down because they're all down. But which ones could recover? The whole reason to own Digital World Acquisition Corp, DWAC or DWAC, is because of Truth Social and Trump. It never really took off. It only had a couple million users, never really made any substantial headway. However, do you get your money back? And that's the thing. When you follow somebody into a trade, be careful. Buying something out of loyalty or because you like something, because you like somebody, it's a tough thing to do. I remember when Musk touted Dogecoin. It was something like 10 cents a coin. It went to 75 cents. He said, buy it. And then it went down a little. He said, I would still buy it. And now it's under 10 cents and people lost money because people follow people into these trades. I think when people have a big platform do something and they say buy this or buy that, they're not financial advisors. They're not people like me who have to say past performance is no guarantee of future performance, or you could lose money. You could lose all of your money. There's a reason why people like me have to say all these disclaimers when we talk about a stock, any investment, even any kind of investing or investment strategies. There's so much that we have to say because the public has to be warned. Now, I know when I say something in the public realm, somebody listening to me who can't afford to take risk might take risk in something because they believe in me. I said something and buy this, and they said, I'm buying it. I don't want that on my head. I want to talk to you individually and see if it's right for you or not. And then I'll make a recommendation. Isn't that better than just making a blanket broad recommendation to people who can't afford to take risk? I'm in the business of taking calculated risk. That's what we do. We take risk. I'm not in the savings account business. That's the bank. I'm in the risk business, investing, and I'm in the control business. We handle things we could control so we could make a financial plan to get you to where you want to go in your future. All right. So that's that. And what else are we going to take a look at? So these are the big stories of the day. Let's take a quick look at the bond market. Okay. The 6-month yield is still paying 4.8%. The 4-month 4.7%, the 1 year 4.6%. I'm talking to people like friends of mine, and one said, I bought CDs at the bank. I got like up to 4%. And they go, but what's safer than a CD? And CDs are safe. CDs invest their money in treasuries and give you less return because that's how the bank makes money. You could buy the treasuries. I don't know. And then people go, but what's safer than a treasury? The treasury, what's safer than a CD? I don't want to imply that CDs aren't safe. They're FDIC insured up to $250,000, $500,000 per couple. But what I want to tell you is treasuries are safer. When I talk about bonds, I have to say stable. But when it comes to T-bills, that's when I can really come out and say they're safe and they're guaranteed. And the 90-day T-bill, that's the risk-free rate of return in any economic dissertation you look at. That's the bottom rate that everything is compared to. And the 90-day T-bill, 3 months, is 4.698%. Let's just call it 4.7%. So any investment you buy, has to clear almost a 5% return, right? So now if you want to buy a stock, and this explains why dividend stocks went down, okay? Uh, because interest rates went up, which means interest rate products became more competitive with dividend paying stocks. So the risk free rate of return is 4.7%. Now, any investment has to have a promise or a promise of greater than that for an investor to be attracted to it. So if a dividend a year ago was 3% or 4% on a stock, people would say, well, that's a pretty good yield. And the stock could hold up because the dividend is so good. Investors will be less likely to sell that stock because they want the dividend. But now that the yield on the 90-day T-bill, considered the risk-free rate of return, is almost 4.7%, that buying a stock for a dividend is really not a good argument now. Now, we know that stocks eventually could raise their dividends and show capital appreciation, but they could also cut their dividend and show capital depreciation. So it's a higher hurdle to clear when short-term interest rates on T-bills are up like they are now. And this takes earnings and dividends in the future, and when you discount them back to today, makes them worth less money. And that really explains why the market could still be overvalued, and it explains why there's a compression in price to earnings ratios. So everything could really be explained by inflation and interest rates. So I hope this economic dissertation helps you out with your thinking about the stock market. Thank you so much for watching, and I'm going to go skedaddle now. Thanks, and I'll be on tomorrow morning. Have a great day. Have a great night.